A case study overbought RSI stock trading. Case study overbought RSI stock trading. Let's get started. I'm on a weekly chart of American Express, and we are using the RSI period 14. For new traders, the RSI stands for the Relative Strength Index. It is a momentum oscillator, and the ultimate role of the RSI indicators is to pinpoint bullish and bearish financial instruments. When the RSI is above 50, it's indicating to us that the financial instrument is bullish. And when the RSI is below 50, is indicating to us that the financial instrument is bearish. However, my friend, we have a case study here when the RSI is overbought. Okay, we are talking about American Express stock on a weekly chart. You can see that the RSI, okay, is above 70, indicating to us that okay, the financial instrument is overbought. All right, it is this. The RSI is also above 50, indicating to us that the financial instrument is bullish. When a financial instrument is bullish, it must display higher lows, higher high. If it fails to do exactly that, it's not bullish. Though the RSI is above 50, if the financial instrument is not displaying higher lows and higher high, it is not bullish. Okay, so here we are, case study. We have the RSI above 70. Generally, a lot of traders that are trading like old-fashioned way that people were trading years ago, 20 years ago, will place a trade to sell. Sometimes it may work, sometimes it may not work. Hopefully, they have a method to control the risk. All right. But what I say to traders is that when the RSI is overbought, it means that the price is at a resistance level. One should draw all the resistance level. I will not go deeply into that because I've already recorded a video when I talk about that. The video that I'm talking about, the title of that video is Step 1 to Improving Overbought RSI Stock Analysis. Step 1 to Improving Overbought, okay, RSI stock analysis. Check it out, or you too search that video. That will help you to understand the meaning of the overbought RSI oscillator or overbought momentum oscillator. This is a case study. We are looking at American Express. So once again, the RSI is overbought. We can see if I draw, you see, drawing this point and this point, I draw the first line, which is a bearish trend line, and I just choose one point here and draw a line that is parallel to the first line. So we can see that the financial instrument is in a declining channel, or the current market pattern is a declining channel. Therefore, we will give priority to sell signal on the edge of the declining channel. Now, this is a bearish trading setup, but one must use a top-down trading method. So in this scenario, as we see like this, in a declining channel, the price has been displaying lower lows and lower high. Now is retesting the edge of the declining channel. Can we sell and forget? Can we just sell and ignore it? Can the financial instrument go up here? Or will it definitely, by all means, 100%, gamble all our money, or our hard-earned money, onto it and just sell, saying that this is definitely going to go down? No. All right? There's no place for gamblers here. All right? Let me explain myself, okay? So the price now here, okay? So what we say to traders, this is a bearish trading setup. We will now switch to the week time frame, 4-hour time frame. So for the weekly chart, top-down trading method to control the risk here. We are on the edge, yes. Price in the declining channel, yes. Market pattern bearish, great. Now let's go to the 4-hour chart and see whether there is a signal to sell. What I say to traders, so I have drawn the blue channel on the weekly chart. What I say to traders, okay, one of the biggest day trading and swing trading mistake is what? The violation of market pattern, okay? So therefore, anytime we change time frame, we need to draw the channel. What is the current market pattern on the 4-hour time frame? All right? It's a rising channel. The current market pattern is a rising channel. This is it. So to differentiate the two channels, I will start putting a bit of color here to make it more interesting. All right? Pay attention to the orange channel. Currently, that is the representation of the current market pattern on the 4-hour time frame. What do we see? We see a rising channel. So on a weekly chart, we see a beautiful, gorgeous overbought RSI on the weekly chart on the edge, exactly on the edge. The prior was displaying lower lows, lower high. Great. Now we want to sell. We must go to the weekly chart to take the signal. The signal will take place on the 4-hour time frame. And the entry will be on which time frame? 15-minute time frame. You are a swing trader and you need to know those things. Weekly chart, 4-hour time frame, 15-minute time frame. We can use weekly chart, 2-hour time frame, 10-minute time frame. We can do that also. All right? But now, on the 4-hour time frame, here it is. The price is in a rising channel. What can we do here? All right? So the price is in a declining channel on the weekly chart, on the edge. On the 4-hour chart, there is no signal to sell. Probably there was signal here, but look, the market pattern is a rising channel. So if you were selling on the edge here, no very good. All right, not very good because we have a rising channel. So in this scenario, we will look for a support level. All right, are you getting the message? If the price is bullish, we are paying attention to the support level and the high. When the price is bearish, we are paying attention to a resistance level and the lows, lower lows, lower lows, lower lows in the downtrend. And we are paying attention to what? Right? Resistance levels. But the price must break support level. So here, as you can see, because, all right, on the 4-hour time frame, we have a rising channel. If I want to sell here, what will be the best scenario? I will want the price to come out of that rising channel and to retest the edge of that rising channel. If the price comes out of this channel, it's indicating to me that this current bullish momentum on the 4-hour time frame is diminishing. Now I want to sell on the edge. So this is just a short video to stir up few things in traders. All right, there are more videos about the RSI trading at the Pro Traders YouTube channel. But this is stock trading, all right? And we are talking about American Express stock listed on the Dow 30. And we have a case study when the RSI period 14 is overbought on a weekly chart. We now, to control the risk, we are using a top-down trading method, combining the weekly chart, the 4-hour chart, and the 50-minute chart. Here we are, the 4-hour time frame is the signal time frame, and the weekly chart is the setup time frame. I don't want to go deeply into this, otherwise the video will be too long. We can talk about the validation of the trading setup, okay? So here, if we want to truly sell, we will come out of that rising channel and retest here. Or minimum, there is another line here, the 6454, the 6457, this level here. Okay, now, I'm going to, so you get it now, you get a message, okay? You get a message, all right? All right, you get a message. Because I don't want the video to be too long, I will not be repeating myself, okay? So if there's something you do not understand, okay, you can replay the video or put a question in the description section, all right? In the comment section, all right? So here it is on the 4-hour chart. There's no signal to sell. If you are selling here, you are violating the market pattern on the 4-hour time frame. It's a risky trade. I'm not saying that one cannot trade it. Sometimes you may see it may just pop out and go down. if you want to trade, you want to trade on the edge. Sometimes you may miss some opportunities. I'm not saying that it will definitely go up as it's going up here. Traders, some traders, we try to buy here. It's a support at 6457. All right. So let's continue this case study overbought RSI stock analysis. Okay. So I'm going to go back again to the weekly chart. All right. So I'm talking about that level 6457. So what I said before, traders, when they analyze the financial instrument, they concentrate on what is happening now, okay, on any time frame, weekly chart, monthly chart. So most traders will be looking only in this session. You don't want to do that. You want to look on your left hand side, okay? There's a resistance here. This is 6457, okay? So what is happening to this level? It's a key level. It was a resistance before. You can see price went down. Now price breaks above that level. Now you get D below it. Now it's retesting it. So what can we say here? The RSI is overbought. All right. On the 4-hour time frame, we have a rising channel. How do we handle this? Okay, very simple. Trade the price and pay attention to the price. So in this scenario, all we will say to traders, priority to bullish signal above, okay, 6457. Use a top-down trading method to trade it, and priority to bearish signal below 6457. That's it. End of the matter. So going back again to the 4-hour time frame. Right? Here it is. Right? Now on the 4-hour time frame, the line, I want to see that line. Price dip a little bit below that key level. It's just hanging there. I don't like this. What I would prefer, if I truly want, I would prefer it to go away from it, from that, okay, channel, and to retest it like this on the 4-hour time frame. That can also be, okay, a bearish trade setup for day trading purposes. And then we take it down like that on the edge. Below, sell. Below, look for an opportunity to sell, use a top-down trading method. And above, look for opportunity to buy on the edge. But as one wants to buy above 6457, be aware of the blue trail line here. All right, it makes sense. So in fact, the bullish zone now is above, okay, the trail line here. All right, it makes sense. All right. So if you have any question, put in the comment section, and in due course, all right, we will answer your specific question. This is a case study of overbought RSI stock trading, analyzing the American Express stock EPIC AXP Alpha X-ray Papa. On the weekly chart, we have an overbought RSI. On a 4-hour chart, we have the oversold RSI. What's going on? Now, if one is trading the RSI, one will get confused, of course. But when one is trading the price, one will not get confused. All right, one is trading the price, not the RSI itself. The RSI is giving us a warning. The price must confirm a warning. It makes sense? It is also powerful. We wish you the very best in your trading. And until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about case study overbought RSI stock trading. Speak to you soon.